Good evening, friends. How are you doing? Is audio okay? Should I start? Good evening, everyone. Should I start, guys, if audio is okay? Good evening, Veer. Perfect. Let's start. Okay, before we start, how many of you have doing the class for the first time? I could see some old names. How many of you are doing the class for the first time? Who's sure, Ami? Sorry, the name is Ami, right? Sure, Veer. Sure. Sure, Rishika, you have any question? You raised your hand. Anyone else? Rishika, you raise your hand. Any question? Anyone else? No? Okay. So basically you have done some part of it. You have done either the part 2 you have done, or part 3 you have done, or part 1 you have done. Perfect. Shiva, that's your first class? No, you have done it, right? That's your first class, Shiva, right? Okay, perfect. No problem. All right, guys, we'll start with the part 1. Part 1 is all about the individual taxation. So I'm not sure how much you're familiar with the enrolled agent course. There are 3 parts in that case. Part 1, part 2, part 3. We are starting with this part, which is individuals. After we are done with the individual taxation, we will move to this part 3, which is the representation. And once we are done with this, we'll again start with the part 2, which is business taxation. So first we are going to do this, then this, then this. And that's how we keep on rotating the parts in that case. Okay. What is part 1? What is part 2? What is part 3? Part 1, as I discussed, it is about the individual taxation. Individual who? That means anyone like you or I, anyone who is an individual, how the taxability of that person is going to be, right? Second is going to be taxability of the business entities. We are going to discuss various entities, business entities. We are going to discuss S corporation, C corporation, partnership firm, state, trust, various tax exempt organizations. All the entities, how their taxability is determined, we are going to do in the part 2. What is part 3? Part 3 is basically if you are representing your client in front of the tax authority in US, what are the things you have to take care of it? What are the things you have to take care in that case? That's a part 3. Okay. Before we move, I just want to talk about few things, how we are going to run the classes. Do you need to prepare before the classes? No, you don't need to come prepared for anything. Come empty slate. Absolutely. If you have not done tax, absolutely, it is a great thing. We are going to learn here because empty slate is much better than dirty slate. Second is, I would strongly suggest to revise whatever we have done it. Since I'm not asking you to prepare anything, it would be a good thing if you, after the class, if you quickly revise this, it is going to be much easier because we are having almost duration of our course is almost 1 month or 1.5 months. So by the time my point is, by the time the course is over, make sure you have at least the one round of reading along with me, and in between we'll keep on doing the revision session, so you can also revise in between also. So because of that, your learning is joining it for the first time. Shiva, you're joining for the first time. Veer, you're joining for the time. Kiran, have you done any of the classes earlier with us? Any of the part? Done it? Okay. All right. Is it necessary for you to have the knowledge about the Indian income tax? Absolutely not. In fact, it's much better that you don't have the knowledge of that. People who are the CA in that case, sure, Shivangi. So who have the knowledge about the CA, they face the challenge in that case. So it is better that you are not having the knowledge in that case. Okay. Shivangi, is that your first class? Okay. Sure. Have you read US taxation everywhere, anywhere? Have you done? Okay, sure. Okay, no problem. So guys, you don't need to have the pre-knowledge of the Indian taxation. It does not matter in that case. Okay, sure. Can we just do one thing, guys? Can we just, whoever is having the name, can you just please rename your name with basically your Zoom name so that it's easier for communicate. I may not remember it also. So please do that. It's going to be convenient then. Sure. Okay, moving on. Part one, everyone. Part one. We are having, when I say, sure. Individual taxation. Part one is going to be individual taxation. What are the individual taxation? It is going to be federal income tax. Sanket, you connect with me over the break. I think you have already done the class. You connect me over the break. We'll discuss that. Individual taxation, that means we are talking about federal income tax. In US, guys, US, we are having federal income tax. We are having state income tax. We are having local income tax. In local, we are having city and we are having county income tax. Are we supposed to learn all of it? No. This is not the part of a curriculum. State income tax not a part of a curriculum. City is not a part of it. County is not a part of it. We are just going to do only federal income tax. Federal is more like a central. Federal is more like a central. So we are going to study only the federal income tax. We are going to do only individual federal income tax. Okay. Besides that, we are going to do more taxes. We are going to do other taxes also. What is going to be other taxes? Other taxes we are going to discuss is going to be social security taxes, Medicare taxes, gift tax, and state taxes. This you can avoid. I don't think this is relevant for you. This all obviously is just a background for you. This is something you can ignore it. But gradually, as I'll move, I'll tell you this is something you can copy this. Either it's your choice. Either you want to copy it on a register, or you can take a screenshot also. It's absolutely your wish. Okay, I suggest you to make a register because then you can make a proper index for that also. Everything you can do in that case, but it's absolutely your wish if you want to take a screenshot also. Okay. Any questions, guys, up till here? Do we have? Okay. In India, we do the various heads of the income. For example, we do the salary heads, we discussed, we do have the house property, we do the other sources of the income, we do the capital gains. None of it, absolutely none of it is relevant for you. We don't classify the income in US like this, that this is my salary income, this is my house property income, capital gains. We don't do that. Nothing like that. We follow a particular format. So I would suggest you to copy that. This is going to be helpful. First, we are going to see here what is going to be the gross income. When I say gross income, that means we are looking for the individual's gross income. Anyone who has never done tax? Anyone? Is there anyone who has never done tax? Basic points are clear to everyone. What is taxation? Income taxation. Yeah. So income tax is obviously when you are earning any kind of a income, on that you're earning the tax, right? That's an income tax. So here we are talking about federal income tax. That means the center income tax we are talking about. Okay. First is the gross income, everyone. Gross income, when I talk about, I'm including every income item in this case, every income item, everyone in this case, whether it is going to be your wages, whether it is going to be the rent, whether it is going to be capital gains, whether it is going to be the business income, everything. So it's not like India where we are having different heads. We don't have different heads. Everything is combined in that case. That is a business income. This is a gross income, sorry. From this, we're going to reduce adjustments. We are going to reduce some adjustment. Now, what is adjustment? Adjustments are the few expense items which we reduce from this. What are those expense items? Gradually, we are going to move in that case and discuss what are the adjustments in that case. From gross income, guys, we are going to reduce adjustment. What we are going to get in this case? We are going to get AGI, adjusted gross income. AGI, adjusted gross income. Gross income, that includes everything. From that, we are going to reduce adjustment. Expenditure as adjustment are the few expenditure. From that, we arrive at the AGI in that case. Okay. From AGI, we are going to reduce standard deduction or itemized deduction. We are going to reduce either of that. That means we are not going to reduce both. We are going to reduce either of that. Which one do you prefer, guys? Whichever is higher or whichever is lower? What do you want? Do you think this should be, we should pick up whatever is higher, or we should pick up whichever is going to be lower? Everyone, what do you think? From AGI, correct. We are going to pick in this case whichever is going to be higher. Whichever is going to be higher in this case. The law says whichever is beneficial. And obviously, whichever is beneficial is whichever is higher, obviously, that is going to be beneficial for you. So whichever is higher, you are going to reduce in that case. Okay, so it is going to be 1/2. That means you're not going to get the reduction of it. You will take either of that. Okay, that will give you taxable income. I'll come back to that. But before here, standard deduction, everyone, we are claiming either of that. That means either you can take standard deduction or you can take itemized deduction. Either of them you can claim it. Is it possible that in the year 2018, I'm taking standard deduction? In the year 2019, I'm taking itemized deduction. Is it I'm taking next year, I'm taking standard deduction? Yes, absolutely okay. You can choose, you can switch at any time. You can easily switch. That should not be a problem. Whichever year you are finding it more useful for you, you are going to switch in that case. So that should be okay in that case. Are we good? Any questions, guys? Any questions up till here? No matter how stupid the question is, please ask, guys. No? Okay. Then we are having taxable income before QBI deduction. We are going to reduce from this section 199A deduction, which is also known as QBI deduction. What is QBI? QBI is qualified business income deduction. That means if you are running some business which is a qualified business, you will get some deduction in that case. You are going to claim some additional deduction in that case. We'll discuss about this, so don't worry. This is the further deduction. We are going to reduce from this. And then whatever comes in, that becomes your taxable income. You can copy this or take a screenshot. As you're done. Okay. We discuss about the standard deduction and itemized deduction. Standard deduction is going to be, guys, more like it's more like a standard thali for you, right? That means it's just a flat dollar amount. It's just a flat dollar amount. Let's say 12,550. It is a flat dollar amount. That means you can't change it. Every year you are eligible for this amount only. That's it. It's a flat dollar amount in that case. But if I talk about itemized deduction, it's more like a la carte. That means you can, if you have taken, let's say, if someone is increasing the medical expenditure, the person can claim this deduction. If someone is taking the business housing loan, that person can get the deduction of interest. If someone is taking, let's say, giving the charity, in that case, that person can claim this. So various categories, which we are going to obviously discuss all the categories in that case, but it is more like a different options which is there in that case. That means we are having medical, we are having interest in that case, we are having taxes, charity, all of it losses. So all of it are the variety of the things. But standard deduction is going to be flat dollar amount in that case. So if I ask you which is convenience wise, which is better, guys? If I ask you convenience wise, which one is better, SD or ID? Absolutely, standard deduction. Reason being, in standard deduction, you don't need to keep any bills. But in the itemized deduction, you have to keep all the bills also. So yeah, convenience by this, but obviously you have to gauge in that case whether whichever is going to be more beneficial for you. Okay. This line, everyone, this line, any expenditure before this line, that means adjustment, is known as above the line deduction. Above the line deduction. Any expenditure underneath that, any guess what would be the name? What is going to be the name of those expenditure? Below the line, absolutely. Below the line deduction. So adjustment is also known as above the line deduction, and standard deduction, itemized deduction, QBI deduction, we also known below the line deduction. Are we good? Is that okay? Any questions, guys, up till here? No? Okay. QBI deduction, everyone. I have covered the QBI deduction. It is not given in your book. They have not covered in the sergeant has not covered in the part 1. That's why I have covered the QBI deduction in the part 2 already. So I have taken almost 1.5 lecture for that. So if you are writing exams immediately after the batch, then you should see the recording of that. if you're writing now. But if you're waiting, if you're attempting all, if you're attending all the batches, that means after that you're planning to write to attend the live part 2 batch also, then you can wait. There I will cover again the QBI deduction. You can see there also. So it's absolutely your wish. It is already recorded. You can see there also. Okay. Now, can we just quickly try one question here? Let's say wages is $100. Interest income is $10. Dividend is $9. Above the line deduction, $5. QBI deduction, $2. Itemized deduction, $12. Standard deduction, 50. Can you please calculate what is going to be taxable income? Just plug in the number in the format. $97. For you. Excellent. Then we are going to reduce 2 in this case. So it is going to be 114 minus 17, 97. Taxable income. Any questions here, guys? No? Please ask, guys. I will not get to know if you're not understanding anything. Please ask any question. No? Okay. I'm continuing with that format, everyone. Whatever the format we have done, I'm just continuing with that. So you have calculated up till here the taxable income. You have already calculated taxable income. Okay. Now, whatever is your taxable income coming, everyone, on this, you are going to calculate the federal income tax. Federal income tax. That means very simple. If your taxable income is coming, let's say $10,000, and if I tell you that your tax rate is coming 15%, then your tax is going to be how much? What is going to be your tax? $1,500, right? $1,500 is going to be your tax in that case, right? Simple. Similarly here also, after you have calculated the taxable income, you are calculating what is going to be your federal income tax in that case. Okay. In US, we are also having, in India, the way we are having in India has the progressive taxation. Similarly, in US also, we are having the progressive taxation. What is progressive taxation, everyone? What is progressive taxation? Very nice. Higher the income, higher the taxes in that case. Correct. So that means as your income is rising, so this is your income. This is your income. So as your income is rising, the taxes will go up. Correct. Similarly, in US also, we are having progressive taxation. We are having the progressive taxation itself. In US, we are having two slabs. First slab is for the ordinary income. Second slab is for LTCG, long-term capital gain and qualified dividend. Ordinary income, the tax rate is going to be approximately 10 to 37%, which is known as normal rate. This is what you are having here. You will have 0 to 20%, which is a preferential rate. We'll discuss how, where to apply, which in this case, all of it we are going to discuss. I'm just telling you for your understanding. So there are two slabs in that case. If you are having a normal income, any wages or something, then the ordinary slab will apply. Otherwise, the capital gains, if you are having capital gains, then it is going to apply in that case. Okay. Now, from federal income tax, we are going to reduce tax credits. Now, tax credits we are going to reduce in that case. What is tax credit? Tax credits is something which the government is giving you the benefit if you are in a particular kind of a taxpayer in that case. For example, the taxpayer is having kids. The government is giving you the benefit in that case. If the taxpayer is adopting the kid, if the taxpayer is taking any education loan also, if the taxpayer is setting up a project which is going to give the employment to the people, so it is going to give the employment to the people. So like that, we are having the variety of it. Almost I'll take 2 to 3 lectures in covering the tax credit. So don't worry on this. Right? There are many tax credits in this case, Sanket, depending on the taxpayer. So there is not number in that case. There are different tax credit, different people in that case. So because of that, it is going to be different in that case. So tax credit is going to be that. Important point here is going to be, guys, tax credit we are reducing. Tax credit we are reducing from the taxes. Up till now, whatever we were discussing, we were reducing. We were reducing adjustments. We were reducing standard deduction. We were reducing itemized deduction. We were reducing the QBI deduction. All we were reducing from the income. Which is more beneficial, everyone? Tax credit or these deductions? Why tax credit is beneficial? Correct, because you are paying less tax in that case. Correct. So that's why tax credit is going to be beneficial in that case. Correct. It is going to directly reduce the taxes in that case. Perfect. Tax credit you have reduced. From this, if after that you are going to add few other taxes. For example, you are going to add Medicare tax. You are going to add social security taxes, all the taxes you're going to add in this case. And this becomes your total taxes. Okay. From this, you are going to reduce whatever the taxes you have paid or whatever is the withholding tax. You're going to reduce this. WHT is withholding tax. You're going to reduce this. Whatever is left, that becomes taxes payable or refund. Figure in bracket is going to be refund or is it going to be taxes payable? Very good. It is going to be refund in that case. So that's why I'm writing in bracket refund in that case. Are we good? Is that clear, everyone? Any questions? Okay. Tax credit is also known as the dollar for dollar reduction. Dollar for dollar reduction, because directly it is reducing your taxes. It is something which is directly reducing your tax rate. That's why we call it the dollar for dollar reduction in that case. Okay. Going forward in your book, in your book, you will find one more item in this case, which is known as exemption. Gradually, when you're going to read your book in the sergeant, you're going to find the exemption. Exemption does not exist anymore. Gradually, we are going to talk about a law, which is a very, very prominent law, which is going to be TCJA, Tax Cuts and Jobs Act, which is also known as Jobs Act. It came in 1718. So Trump brought this in 2017 and 18, which has changed the entire US taxation completely, right? So you can call this era as a pre-TCJ era, and this is post-TCJ era. They have done so many different changes in that case. Some changes are good, some changes are bad. Most of the changes are good actually in this case. So it is completely, it have changed the paradigm of the entire US taxation. That is why whatever the exemption is there, exemption used to be here. Pre-TCJA, exemption used to be there, but now the exemption has been suspended. Now there is no exemption anymore. Pre-TCJ, you don't have a section 199A deduction, but now you are having section 199A deduction. So I think the book is not capturing, still it is missing in your book. So even if you're finding it the exemption, don't get confused in that case. Are we clear? Is that okay, everyone? Okay. I'm writing a note on this. So there is no update on this. I mean, in this case, already the book, whatever we are doing the latest only. So all things are updated. This is the error which is there in the book. It is the error in the book. So I'm just telling you in that case. Rest everything is updated in the book. Anytime. TCJA has suspended exemptions temporarily from 2018 to 2025. Most of the changes which the TCJ has brought are temporary in that nature, just like this only. That means after 2025, things might come back normal in that case, or maybe Biden is going to bring any changes. That's a different point. But for the time being, for your purpose of the study, there is no exemption. It might come after 2025 onwards, but you don't need to worry about this. For your exam purpose, it's not the exemption. Should I move? Everything is okay. Okay. Everyone, can you just tell me, is exemption what we just discussed? Is it the same as tax exempt income? Generally, people have this confusion. Is it same? Exemption and the tax exempt income? No, it's not. Exemption basically, I mean, used to be more like a deduction, right? It is going to be more like a deduction, which used to be allowed. Tax exempt income could be any income on which you're not charging the tax, right? For example, interest on the municipal bond. Interest on the municipal bonds. Generally, it is tax-free. This is tax-free. So both are chalk and cheese. It's just not comparable. I'm just specifically telling you this point. In that case, generally people get confused. In that case, people find half of the thing. People say, okay, here it's exempt, here is also exempt. That means it is same. No, absolutely different thing. Exemption is the deduction. Here, tax exempt income is basically the income we are talking about. That. Okay. Any confusion, anyone? Please let me know. Okay, let's move. Let's do one comprehensive question, which is going to cover everything. Wages is 100,000. Sure, Rishika. Which point? This point or exemption? Exemption versus tax exempt income, is that what you're asking? Oh, no problem. First of all, I'm very glad you asked me this point. Please keep asking, guys, if you have any doubt. Okay. So what I'm saying, Rishika, first of all, exemption is not anymore. Exemption is not valid anymore. Is this point clear? Exemption is not in existence anymore. Yes. Okay. Is this point clear? Exemption is not valid anymore because TCJ has suspended this. If it is suspended, then why I'm talking about this? I'm telling you because sometime in your book, they have mentioned it. So I'm just specifically writing so that you don't get confused around that. Okay, that's my reason of telling you. This is exemption. What used to be exemption, Rishika, in that case, exemption used to be some kind of a deduction. That means, let's say, I'm talking about pre-TCJ again. That means once upon a time we are talking about. If the income of the person is, let's say, $10,000, and if the exemption is $2,000, then 8,000 used to be taxable income. That means it is more like a deduction for you, Rishika. Is this point clear? It was a deduction for you. But I was talking about tax exempt income. What is tax exempt income? That means if this is the taxpayer and taxpayer has invested in a municipal bonds. That means, let's say hypothetically, it has purchased, taxpayer has purchased any bonds in that case. And on bonds, you are going to earn the interest. You're going to earn the interest on the bonds. Is it your interest income? Is it your interest expenditure? Income or expenditure? Very good. It is your interest income in that case. This interest income is tax free. This interest income is tax free, tax exempt. Do you find any connection here in this tax exempt and this exemption? No, right? It's very different. It's very different, right? One thing here, I'm talking about the income. Here I'm talking about the income. Here about the expenditure. So both are very different things. That's something I was telling you there also, that both are different. Both are different in that case. Why I told you here, because generally people get confused in that case. People thought that the exemption and the tax exempt income are the same thing. Is this point clear slightly? Yes, no, Rishika? Please don't say yes if it is not clear. Okay. No, Satvik, it used to come before 199A deduction actually. But does not matter, Satvik, not relevant now. All right. Let's try one question. We were doing a question here. Let's do a comprehensive question here. Wages are 100,000. Interest is 9,000. I'm writing everything is in thousand. Okay. Dividend is 5. Adjustments 15. QBI $0. Is it possible that it can be 0? Can it be 0? Yeah, it can be. If you don't have any qualified business, it is going to be 0. No problem in that case. It is going to be 0 in that case. Okay. Standard deduction, everyone, is 10. Itemized deduction is going to be 15. Tax rate, everyone, is 20%. Tax credit, everyone, $800. And withholding tax is $800. Okay, these are all the figures here. These are in thousand. What is going to be taxes payable or refund? 8,000. I'm keep writing all the answers. $340. Okay. Everyone, these are figures in thousand. Okay. These are the figures in thousand. These are the absolute figure. That means not in thousand. Quickly try, everyone. You will understand only once you try. Sure. Shivangni, what is going to be the answer? Aravind. Okay, I'll try. Let's do it. What is your gross income, everyone? What is your gross income? Ami, what is your gross income? Gross income is 114. Sure, no problem. Sure, Satvik. This is the gross income. Gross income is 114,000. So I'm writing here. Gross income 114,000. Then we are going to reduce the adjustment 15,000. It is going to be 114 minus 15, 99,000. What should I reduce next, everyone? From this, what should I reduce next? Very good. Itemized deduction, standard deduction. Which one should I reduce? Very good. I'm going to reduce itemized deduction in that case. That means 15 in that case. So 99 minus 15 should be 84,000. Correct. Then QBI is 0. That means this is 0. So your taxable income is 84,000. How much tax on 84,000? 16,800. Everyone, is this okay? 16,800. Ami, is that okay? 16,800. Rishika, Shiva. Okay. Now, from this, we are going to reduce. From this, we are going to reduce tax credit, which is 800. From this, we are going to reduce withholding tax, 800. That means 1,600, 15,200. Correct, Sadhvi? Taxes payable. Any question, any confusion? Anyone, any item of the doubt, please ask. If I need to repeat anything. No, should I move? Okay, I'll move. Now, I'll start with you a new topic. this is just the very basic. I'll start with you the new topic, which is going to be very, very important. So I'll start with you. Sure. Which one? The entire question. Gross income is clear to you? How the gross income is arriving? 3 points. Sure. So taxable income is clear, how the taxable income is arriving, which is 84,000 into 20%. From this, we have done, you are going to reduce the tax credit. If you see here, from this, we are going to reduce the tax credit. So it was coming 16,800. From this, I have reduced 800. Is this okay? Then withholding tax is given. I have reduced withholding tax also. So 16,800 minus 800 minus 800 should be 15,200. Is that okay? Perfect. Let's move. Anytime. Please keep asking, guys. No problem. The topic I will start is the filing status, everyone. Filing status and dependency rules. Dependency rules. Interest is an income and it is exempted. Not Rishika. Not all the interest are exempted. So your point is valid. I've just discussed with you the interest on the municipal bond, right? Not all the interest are exempt. Only the interest on the municipal bond is going to be exempt. This is going to be exempt. Rest all other interest are taxable. It's a good question to ask. Is it okay? It's good. That means you're connecting the dots. Brilliant. Very good. All right, guys, let's start the topic. Filing status and the dependency rules. Extremely important topic. Very important topic. Very fun topic also. Definitely you should get 3 to 4 questions on this topic. Okay. Hear me out. It is very interesting, very simple topic. Hear me out the entire conversation, and I'm sure by the time we are done, you will be very, very clear with that. Okay, let's start with that. Before I start, I'll quickly talk about a story. Let's talk about a single story. Let's say this is H. H is a single. H meet a girl in our EA classes and they fall in love. Okay, assume this is a heart. And after some point of time, they got married. They had a kid. Let's call that HW Junior. Everything was going good, but after few years, they started having their own differences and they started living apart. H and W, they started living apart. And with W, HW Junior is also staying. Okay. After few months, unfortunately, H died in a car accident. So now only W is left with HW Junior. In their neighbor, there is a person called H1. Very nice person. Person is taking care, is maintaining the house. Person is maintaining the house for his parents. Person is maintaining the house for its relative also, and it's taking care of everyone in that case. Gradually, they started meeting and H1 and W started dating. And After some point of time, they got married and then they lived happily after. Okay, very bad story. But this story covers your 5 filing status. Number 1, single. Number 2, joint return. We also call joint return as married filing jointly. Here, this is married filing separately. 3 we have done: single, married filing jointly, married filing separately. 4th, here the person has died. This is going to be qualifying widower or surviving spouse. Its QW is qualifying widow or widower. That means it could be anyone, or surviving spouse. Same, either, both the names are there, surviving spouse. Last one that we talk about this person, this is going to be H2. That means head of the household. These are the 5 filing status which is there available for the individuals. That means it's not the case, everyone. It's not the case that everyone is same in US. No, different people, they can choose any filing status depending on which category the person is falling in that case. Why we are having the different filing status, guys? Because different filing status, everyone, will have a different standard deduction and they will have a different slab also. That's why it's absolutely important for you to know which filing status you are having. Is that okay? Let me just show you the filing slabs. Just allow me a minute. Yes, I mean, the slabs are going to change every year, just like in India, it is indexed for inflation. Because of inflation, it keeps on changing. But do we need to learn that? No. Just allow me a minute. Changing filing type. Okay, so your point is, Ami's point is, I'll repeat your question. Okay, first let's take a screenshot. I'll come back to your question. Can you see? Yeah. Take a screenshot, guys. Then we're going to talk about. If you're taking screenshot, paste it on a PowerPoint slide, empty PowerPoint slide, so that the alignment will not go up and down. If you see, standard deduction is changing, right? Standard deduction for married filing jointly is different. Head of the household is different. Single is different in that case. I'll discuss, Sanket, when we'll do the standard deduction. We're not discussing standard deduction right now. Which is the most beneficial, everyone? Which one looks most beneficial to you? Correct. Married filing jointly. It is the same, everyone. Here it is the same for both. For married filing jointly and the surviving spouse, it is the same. Okay. Next, I'm just moving to the next. Do you remember, guys, I told you there are 2 slabs. if you remember, I discussed with you two slabs. One is the normal rate. Second was preferential rate. Normal rate was 10 to 37%. Preferential rate, which was for the LTC and the qualifying dividend, 0 to 20%. So first is this. Why only 4, guys? I think we discussed 5 status. Why only 4? Why only 4? We discussed 5 status. Because whatever is for the married filing jointly will also apply for the qualifying widower. So same slab is going to work. Again, which looks the most beneficial, everyone? Which look most beneficial? Correct. Married filing jointly in that case, vis-a-vis others. Correct. Take a screenshot. I don't think it is there in your book, so hopefully you have taken the screenshot. This is the second one, which I was talking about, the preferential rate. Take a screenshot here also. Again, same here. Again, the same here. Married filing jointly is the most beneficial, one. Should I move? Okay. So basically, what are the advantages? Advantages of a filing status. Advantages are going to be, you are getting better standard deduction. You're getting better slab. You will find it in the tax credit also. You are going to get the better tax credit also. So because of which the tax will go down in that case. Correct. Sorry, I missed your question. You were asking me something. You were saying, Ami, you're saying changing type. So your question is, if someone, let's say A in the 2018 has filed single, is it possible that next year he got married and he's married filing jointly? Can he do that? Is that your question? No. Okay, what's your question then? Though he can. Okay. Married filing single is not no status. There is no status called the married filing single. Married filing separately is the status. Married filing jointly, you mean to say? Yeah, absolutely. So in this case, I mean, either which ways, single to married filing jointly, single to divorce. If person is single, in 2018, the person is going to file single. Married, let's say here, in 2019, will file married filing jointly. Is that okay? Let's say next year, the person got divorced. In this case, he's still married, then he can file. No. If he's still married, the person is going to file married filing separately, not single. Okay. All right, let's move. I'm going to discuss so many categories in that case. By the time you will be fine, don't worry. Okay, let's see everyone. First, January 2022. Person got married here on 1st November 2022. Person got married here. Till here, the person is unmarried. which on 31st December. So generally guys, in US, we follow calendar year. It's not like India where we following the financial year. No, we are going to generally follow calendar year. When not to follow the calendar year, you can pick other also, but generally we are going to follow the calendar year. That means the period is going to end on 31st December. Okay. So here everyone, if I'm talking about 31st December, which filing status is available for the person? Person got married here. Which filing status is going to be available? Which one? Rishika, Ami? But the person is unmarried for almost 10 months, guys. 10 months the person is unmarried, and it's only 2 months the person is married still. Still, guys? Sure, Ami. Yes, Ankit, last best practice is working. Yes, it is going to be, we always check end of the year. We always check on the last date. That means whether the person is married or whether the person is single. Very good. We are going to check last date. Okay, Ami? So here, I'm writing a note in that case. Marital status. Marital status. That is single, whether the person is single or whether the person is married. To be checked at the end of tax year. Of tax year. So in this case, yes, you are right. It should be married filing separately, or it could be married filing jointly. No, not at the time of filing. We always look for at the end of the year. At the end of the year status we look for. Is that okay, everyone? Ami, is that okay? Rishika, is that okay? Shiva, is that okay? Perfect. Let's see, everyone. This is A and B. They met on New Year's Eve and they decided, let's get married. And on 11:58 p.m., they got married. What status can they claim? Single or married? But they got married 2 minutes before, guys. Just 2 minutes before. Yeah, still does not matter. We look in this case, we always look in this case at the end of the year. Perfect. This is going to be married. Is it okay? Okay. Couple were married for last 50 years. And they got divorced on 30th December 2022. What filing status is available on 31st December? Any other status? No, it's not going to be qualifying widower. First of all, no one is dying, Sanket. So it is not going to be qualifying widower. No. Guys, whoever is saying married filing separately, is the person married on 31st December? No. When the person is not married, how can we say married filing separately? No. No. That means single is going to be available in that case. That means, guys, they are married for 50 years, like 50 years, but just for one day they are not married, you're giving the single? Yes, that's okay. That does not matter. We are looking just on the last day of the year. Are we good? Is that okay, everyone? Okay. He and he, or she or she, that means same gender. Can same gender file married filing jointly or separately? I'm just simply writing the married return. Can they file the married status? Yes. It is allowed as far as it is allowed by the state in that case. Absolutely okay. Does not matter in that case. Okay. Boyfriend, girlfriend, they are staying in a live-in for full 12 months. For full 12 months. And they are sharing the cost also. They are sharing cost also, cost of the flat. Okay, let me finish. MFJ or single or MFS? Correct. Because the person is not married. When the person is not married, that means no question of this, no question of this, only single. Are we good, guys? Any questions up till here? Okay, let's move. Yeah, I'm just telling you just like that only. I told you nothing point in that. When we talk about married filing jointly, everyone, okay, husband and wife. Let's say their tax liability, the total tax liability is coming $10,000. How much H will pay? How much W will pay? Married filing jointly, they are filing joint return, and tax liability is coming $10,000. How much money H will pay? People who have done it, please don't answer that because you have already done this. 50-50, very good point. Depending on their income, very good point. But unfortunately, nothing is like that. We are going to look into that. Their liability is jointly and severally liable. They are jointly and severally liable. What is the meaning of jointly and severally liable? That means IRS can ask husband also full 10,000 or can ask wife also full 10,000. It can ask either of that. It can ask either. Whoever can pay, absolutely, you're going to take that. Okay. Let's say husband, wife, tax liability is coming $10,000. Wife is working, husband is chilling, he is not working, he is not working. In that case, still he will be liable for the taxes. Yes, yes, still the person is going to be same, jointly and severally liable. Are we good? Is that okay? Okay. Write a note here. Husband and wife would be jointly and severally liable if filing married filing jointly, even if either of them is non-working. This is a general rule, everyone. There are few exceptions to that. I'm going to discuss it with maybe tomorrow or maybe on Monday. I'm going to discuss these exceptions for that also. Okay. Whenever husband and wife, I'm just saying husband and wife, it could be same gender also. Okay, no problem in that case. Whenever they are married filing jointly, everyone, the tax year for them should be same. That means if husband is filing calendar year, wife should also have calendar year. If husband is having financial year, it has to be same in that case. That means both should be same. Both should be same in that case. But when the husband and wife, they are married filing jointly, their accounting method could be different. That means here husband could be filing cash basis, wife could be filing accrual basis. That's okay. That's okay. That's allowed in that case. Clear, everyone? I'm writing a note on this. For filing, I'll discuss, Ami. I'll discuss every category one by one. So I'll discuss single also, married filing jointly, every category I'm going to discuss with you. For filing, married filing jointly, that means the joint return, tax year of both spouses, should be same. But accounting method can be different. You can take a screenshot, guys, or you can copy this also. Is that impact the income also? How? Then they're not allowed, Rishika, they're not allowed to follow, they cannot file MFJ. No, I don't understand, Sanket, your question. You're saying, is that impact the income also? What impacts the income? Obviously, cash method and accrual method is going to impact the income calculation. Please rephrase the question. I think maybe I'll not able to understand your question. That's okay. How does it matter? Where is it written that the income has to be same? Whatever is the total income, we'll pay the tax on that. Okay. Okay, everyone. I am on page number 9. Everyone got a book? Does not matter much. That's okay. You guys can read from my PDF. Does not matter much. Page number 9. It's okay, Rishika. Read it from mine. Tax filing status. quickly read this and confirm me once you're done. Let me know if I need to scroll. Sure. Whenever you're done, Rishika, I'll scroll. Let me know. Okay, read this also. Third point, page number 10. As you're done, I'll wait for one more done. Sure, I'll cover that. Satvik, I've not marked that though. I just marked up till here only. Okay. I'll move on. Rishika, you're done? Perfect. Let's move. Very unlikely case, but let's discuss that also. For example, everyone here. This is 31st December 2021. On 30th December. Sure. Satvik, let's see this. I'll answer all your questions. See that. On 30th December 2021, the couple got divorced. When they divorced, guys, what status is available for them? Single, correct? Okay. Why they got divorced here? They got divorced here so that their tax liability of an individual, it could be husband also, it could be wife also, will go down. That means the person does not want to pay the tax to the other person in that case. That's why they're getting divorced. And again, let's say on 2nd of January 2022, they are again going to remarry. In that case, this will not be considered as single. This might be classified as married filing jointly. But again, it is a very fishy area. It is a very fishy area. Reason being, obviously, sometimes it could be a genuine case also, right? It could be genuine case also that they were not getting along, and that's why on 29th of December they got divorced here. And then after a point of time, they reconcile and they say, let's get married again. Elon Musk, he has done the same. He married twice, divorced twice with the same person. So it could be the genuine case also in this case. So In this case, the onus you have to prove the IRS. In that case, generally the who is IRS? Sorry, I have not explained what is IRS. IRS is the Internal Revenue Service. Internal Revenue Service. That means it is the tax authority of US. It is the tax authority of US with whom you deal for the purpose of federal taxation. So here you have to convince the IRS that the transaction is genuine, then the IRS will not say it. But if it somehow it gets proved that the intention is to avoid the tax, if it could be proved that the intention is to save tax, avoid the tax, then here we will say this is not going to be single. It should be married filing jointly. Is that point okay? Let's see that from the book. Next point. Page number 10. If the individuals obtains a divorce in 1 year for the sole purpose of filing the tax return as unmarried individuals, so you told me only it is going to be single status, and at the time of the divorce the individuals intended to and did remarry each other in the next year. Again guys, that's why I'm saying intention is very difficult to prove. How can you prove that the intention is going to be there or not? Intention generally could be proved in that case whenever, for example, for the remarriage, you have done already some kind of a arrangement, you have booked a banquet hall, you have taken the dates from this, any kind of arrangement you have already done, then it could be the case that yes, you are already having the intention in that case. And you actually remarry the person next tax year. The individuals must file the tax return as married filing individual in that case. Is that point okay, everyone? Again, very unlikely case, but yeah. Satvik, where was your question? I missed that. Is that what you're saying? Final decree, divorce under the final decree? So which point? A person is considered unmarried for the whole year if on the last day the person is unmarried or legally separated. In this case, under divorce or the separate maintenance decree in that case. Separate maintenance agreement, divorce, same point. State law governs when the individual is married or legally separated under the divorce or separate maintenance decree. The person is divorced under a final by the tax year. The purpose is unmarried, considered unmarried for the whole year in this case. So that means what they are saying is if the person is divorced at the end of the year, it is going to be considered throughout the year in this case. There are two things, guys, in that case. One is the final decree. Second is the temporary. That means generally, I think it happens also in India. If couple go for a divorce, generally court says that you guys stay together for 6 months and nothing gets sorted out. Then after 6 months, we are going to finalize that. Does it happen? I think same in India also. So till the time, guys, it is temporary, right? Till the time it is temporary, right? Till the time it is temporary, interim, till the time it is interlocutory. In that case, the divorce is not final. If it is final, then we are going to give the single status, everyone. If it is temporary, interim, interlocutory, then what status is going to be available? Single or married, everyone? Married. Is this point clear, everyone? Should I repeat if it is not clear? Yes, no, maybe. Sure, Rishika. So Rishika, I was saying that, is this point clear that the court is asking the couples to stay together for 6 months? And if they can't resolve within 6 months, the court is going to finalize that. So that means couple reach here. They reach court here. The court is going to say 6 months, you stay together, and here we are going to finalize. So till that period, if the person is here and if the person is filing the return here, end of the taxpayer is coming here, here the status is going to be married. But once it gets finalized, after that, the status is going to be single. That means whenever we look for the final divorce in that case, not the interim divorce in that case. Is that okay? Okay. Let's move. Next point in that case, married persons. If a taxpayer is considered married for the whole year, he or his spouse can file the joint return, or his spouse can file the separate return also. That means you can file married filing jointly also and married filing separately also in this case. The choice of whether the person is filing jointly and separately is entirely upon the taxpayer themselves. That means that is their choice, whether they want to file the married filing jointly or separately. That is their choice. A taxpayer is considered married for the whole year on the last day of the taxpayer. We are looking on the last day of the taxpayer. If you are meeting any of the following tests in that case, you are married and living together under the common law marriage agreement. Living and living apart does not matter. Even if the person is living apart, does not matter as far as the person is married in this case, but not legally separate. Legally separate should not be the case. Separated under the temporary decree of divorce, right? If it is temporary, under all the scenario, the person is considered to be the married. Under all the scenarios, the person is considered to be married in this case. Should I move everyone? Okay. Now let's look at one by one. Okay. First, what is the first status we have done, guys? What is the first status we have done? Single, right? Correct. Single is more like a ETC category. More like a ETC category. What is the meaning of ETC category? That means if the person is not falling into any other category, that means if the person is married, the person is going to file married filing jointly, person is going to file married filing separately. If person is taking care of a family members, I'll discuss, the person is going to file head of the household. If person, any of the husband or the wife died, then the person is going to qualify widower. This is the balancing figure. That means anyone who is not fitting under any of these category, that person will fall into that. And we have seen this. This is one of the most disadvantageous category. This is one of the most disadvantageous category as well. So this is the balancing figure. If the person is not falling into any other category, the person is going to come here. Okay. Now, next category I want to discuss with you is the qualifying widower. Is it going too fast, guys? Should I slow down if it is too fast? Speed is okay. Up to you. If you're finding it way too many concepts, then we'll go a little slow. Okay. As you say. We have done single now. You have already understood what is married. In married, we have done married filing jointly, and we have done married filing separately. Now let's look at the next category, which is qualifying widower or surviving spouse. Qualifying widow or widower or surviving spouse. Let's say this is the year. Year is 2018. The person were married here. Couples, husband, wife, they were married here. Let's say here, W died, wife died. Which status is available, guys? Which status is going to, who will take the status now? Wife is going to take the status. Wife is gone, right? So husband will take it, right? Husband, which status husband is going to take it? We'll talk about this. Okay. First of all, everyone, when we were discussing that the status is married or the status is single, when are we looking this? Are we looking in the beginning of the year, middle of the year? When are we looking? End of the year, right? End of the year, correct? In this case, Aravind, On 31st December, are they married? That's why we're checking it. Now it is again a point here. Some people will say if they were alive, if the wife were alive, then they could be, right? But if I check literally on the 31st December, are they married? No, they're not married on 31st December. They are not married because wife is not there. That means the person is not alive. That is why, guys, that is why in case of a qualifying widower case, we don't look, hear me out, in this case, we don't look the marriage condition on the last date. We look on the date of death. We check the marital status not on the date of on the last date. We check on the date of death. I'm writing a note on that, then I'll come back again here. Note. In case of a qualifying widower, status to be checked, on the date of the death, not on the end of tax year. Is this point clear, everyone? Shiva, is that point clear? Whenever any of the spouse, right? Any of the spouse die in the first year I'm talking about. That means I can say first year, rather I should say day, that means the year in which the death happens, year of death. And when the person has died here, and at that point of time, the person is married, the status for the surviving spouse is not going to be qualifying widower, it is going to be married filing jointly. Very different, very unique point in that case, and this is something they are going to confuse you a lot in the MCQs. This is a very favorite area, they will confuse you a lot. I'll repeat this point one more time, guys, pay careful attention. Whenever anyone die in the first year, sure Rishika, hear me out. Whenever anyone die, the year of the death, that means let's say wife died in 2018. In that case, the status available for the husband is not going to be qualifying widower, it is going to be married filing jointly. That means in our question, first question, what we were doing, what status is going to be available? It should be married filing jointly. Are we good, everyone? Any question? Sure, Shiva, is that point clear? Absolutely, Aravind. This is only for the year of the death. That means when on earth are we going to claim qualifying widower? Qualifying widower, everyone, is available for the next 2 years. It is available for the next 2 years. Yes, I was coming to that, Sadvik. For the next 2 years. What are the next 2 years? 2019, 2020. Only for 2 years? Yes, sir. It is only for 2 years after the date of death. That means, everyone, if I talk about here the death happened, this year is going to be which status? What status? Everyone, in the year of death, what status? Married filing jointly. 2019, 2020. I'll answer all the points, guys. I'll answer much more than you will ask the question. Hear me out what we are doing first. This is going to be qualifying widower, provided you are satisfying few conditions. provided you are satisfying few conditions. What is the status available next? Depending on, it could be single, it could be any other thing in that case, but not the qualifying widower. Definitely not the qualifying widower. Okay. So here, if the person is satisfying few conditions, then the status of surviving spouse is going to be available. Qualifying widower, surviving spouse, same point. Should I repeat this point or not? I'll take all the what if question. I'll cover that. In fact, I'll do much more than that. Any questions, guys? Are we good? Yes, no, maybe. Okay. Okay, I'll come back to the condition in 5 minutes. Let's quickly do more permutation combination here. 2018, everyone, 1st February, they got married. Here on 1st July, husband died. Can wife claim marriage filing jointly? Correct. Because here the status we are going to look that of this. Yes, in the year of death. Okay. Let's see, everyone. They were married for last 50 years. On 1st of February, they divorced. And on 25th of February, wife died. Can husband claim marriage filing jointly? Can husband claim marriage filing jointly? Satvik, are they married on the date of death? Are they married here? No, they are not married here because we are checking the condition here. That's why this is not married filing jointly. Is that okay, everyone? Any confusion here? Should I move? Okay, let's move. I'll cover all the points in that case. Let's see here. 2018, wife died here. Correct, Rishika. On 1st April, wife died. Husband got remarried with W1. What status is going to be available for husband? Then with whom, Ami? It is going to be, correct, married filing jointly, but with W1. But with W1. Is that point clear, everyone? Clear, everyone? Okay. In this case, 2019, 2020, can person claim qualifying widower? Same case, but can the person claim qualifying widower? Correct, because the person is not that. Correct, person is not widow. He's not going to claim this. Up, are we good here, everyone? Okay. Okay. Let's see the conditions we discussed. For the purpose of the qualifying widower, we discussed the person has to satisfy few conditions. What are the conditions? Condition is basically the person is taking care of a house for a kid. Who is going to be that kid? Kid or a dependent. It could be any kid. It could be biological kid. It could be step kid. It could be adopted kid. But it should not be foster kid. What is the difference in the foster and adopted? Foster is a temp. Correct, Aravind? See, generally, guys, whenever in US, if anyone is looking to adopt any kid, if you are looking to adopt any kid in this case, it's a long legal process. It's a long legal process. When the person is adopting in that case, that means parenting right is coming. When you're adopting, that means parenting rights are coming. This is adoption. Second is, if the couple is having, let's say husband is wife, this is the kid, you're taking care of the kid. That means you are providing the resources to the person, you are providing the money to the person, to the kid, but you don't have the parenting right maybe. This is known as foster. So here, when we are talking about all the kids. That means the surviving spouse is taking care of a kid. That could be biological, that could be step, that could be adopted, but we're not talking about the foster kid. Is that point okay? Yes, no, maybe. Okay. Should I repeat, guys? Rishika, is that okay? Okay, let's move. Sure. Which point? You should ask me why you were waiting to ask you. Which is not clear. Adoption is basically whenever you are having the legal right on the kid, right? That means you are having the parenting right on the kid. That's an adoption. Foster is basically when you don't have the parenting right. You don't have the parenting right. You're just providing the resources to the kid in that case. Maybe some resources, maybe you're taking care of the fees, maybe you're providing any resources, money in that case. That's called the foster kid. That's a foster, that's adopted. Okay. All right, let's see. 2010, everyone. Husband, let's say this is this person. Let's call this person H. This person is having a kid. The name of the kid is A. H got divorced. H got divorced in 2010 and got the legal custody of the kid. In 2015, everyone, in 2015, H got married with W. It's a new spouse, okay? It's a new spouse, not the same spouse, new spouse. And they are taking care of with them, A is also living. Is the premise clear, everyone? Rishika, is the premise of the case is clear? 2010, H got divorced and H got the custody of his kid. In 2015, he got married with W and they are staying together with A. Okay. In 2016, everyone, 2016, H died. Now who's left? W is left with A. Question, what status is available for W in 2016? Everyone falling for the same trap. Sanket, you should be aware of it. We have done many times. First year of death. First year of death. Is it qualifying widower first year of death? No. It's the first, Ami. Why not first? Debt. Okay. No. Date of death is the first year, right? Where we are talking about the married. We are not talking about the married. When we are talking about we are always talking about the date of death. I think you see here also. See, year of death, married filing jointly. Absolutely, it should be married filing jointly. How about 2017 and in this case? Qualifying widower, is that the biological kid of W? Is that the biological kid of W? Can you still claim it? Sure, Ami, let's finish this. I'll come back to that, else you'll miss this also. Is it the biological kid of W? No. That means, should that be allowed? Why is it allowed? No, legal kid is not the category. We discussed the category of the kid. You're going to follow into the step kid. Is this clear, everyone? So, though not the biological kid, step kid. That's why it's allowed. Are we good, everyone? Satvik? 2017, what status is available, everyone? 2017, what status is going to be available? Correct. Qualifying widower is going to be available in 2016. No, Satvik. 2 years. 2 years is the qualifying widower. Remember, we talk about this. 2 years is the qualifying widower. After 2 years, let me come to after 2 years. 2019. Okay, let's talk about that, Satvik. Then it could be anything else, but can you get the qualifying widower in this case? In 2019, can we have a qualifying widower? No, it is not there. Are we good? Any question in this question only? I'll answer that point, Sami. I'll come back to your question. Any question here, guys? Okay, I'll repeat the question, Ami. I mean, what I was saying, whenever the date of, whenever it is the year of death, whenever it is the year of death, the filing status is available, married filing jointly. Is this point clear? If here the death happens, the year of death, yeah, don't confuse with the first year. I think you're getting confused with the year of death I'm talking about. It is married filing jointly. Okay, for the next 2 years, for the next 2 years, that means let's call it 2018, 2019, 2020. If you are satisfying few conditions, if you are satisfying few conditions, then the status available is qualifying widower. Is that okay, everyone? Not clear? What is the question? Questions? Marriage is irrelevant. Forget about the marriage. Even after 100, if you have 50 years of marriage, it's died. Don't link with the marriage in that case. Look at the year of death. That's it. So does not matter, Rishika. So Rishika's point is, if anyone died it, can you just answer everyone? If the person died on 31st December 2018, same, married filing jointly, does not matter. Is that okay? Should I move, guys? Okay. I have not discussed with you the conditions now. I'll quickly discuss the conditions with you. Then we're going to stop with you for a break in that case. What are the three conditions for you? Number one, condition number one, it has to be a dependent kid. Dependent kid. Condition number two, you are maintaining a house. You are maintaining a house. Assume this is a house. Sorry, really bad house. You're maintaining the house. Who's maintaining the house? Who's maintaining the house, guys? For whom we are looking these conditions? Surviving spouse. Very nice. Qualifying widow, widower. Surviving spouse is maintaining the house. This house has to be the primary residence. This has to be primary residence. This house has to be primary residence for the whole year. Whose primary residence? Of the kid. Kid we have done. Biological, adopted, step does not matter. Only the foster kid is not included in that case. So we have done dependent kid. We have done the surviving spouse is maintaining the house, which is the primary house of the primary residence of the dependent kid. Third condition, everyone, when we are saying you are maintaining the house, when we are saying you are maintaining the house, what does that mean? Maintaining the house means whatever is the cost of that house, maintenance of the house, surviving spouse is providing more than 50% of the cost of upkeep of the house. Surviving spouse is providing more than 50% of the cost of upkeep of the house. If yes, what is the cost of upkeep, guys? That means if, let's say, this house, maintenance cost of this house is, let's say, $10,000, and surviving spouse is providing, let's say, $6,000, everyone. Is surviving spouse satisfying the third condition, everyone? Is third condition satisfied? Yes, it is satisfied in that case. Okay. Are we supposed to satisfy all the three conditions or one of the three conditions? All. Aravind knows the trick. We call it 3 by 3. We call it 3 by 3. That means you are supposed to satisfy all the three conditions. You're supposed to satisfy all the three conditions if you want to claim the qualifying widower. Is that okay, everyone? Any questions? Okay. Anyone who has a question, please let me know. This condition is for everyone, Rushika. It could be biological, it could be step, it could be adopted. It could be for anyone in that case. Okay, I'll quickly repeat what we have done. I'll quickly revise what we have done so that there would not be any confusion in that case. Everyone, this is the first year. This is the year 2018. Here, the person died. What status is available? Quickly, we are going to do very fast. Come on. Everyone, throw answers. Married filing jointly? Brilliant. Married filing jointly. Okay. Conditions are satisfied, everyone. Conditions are satisfied. Status for 2019, status for 2020. QW? QW, everyone. Very good. 2021, can we claim QW? 2021, can we claim QW? No. Any questions up till here? Please, in this slide, any question? It could be any also, I don't know, single, married, anything else. We'll talk about this. But any questions here, guys, in this slide? No? Perfect. Let's make quickly few changes again. They got divorced here. Here died. What is the first year status? Married filing jointly? Qualifying widower? At least give something. No. No. Single. How about for 2019, 2020? You're satisfying the conditions. You're satisfying the conditions. You're satisfying the conditions. But you are satisfying the conditions. You guys are so rigid, you're not going to change. Correct. Still no QW, still no QW. Absolutely. Are we good with this? Yes, no, maybe. Perfect. Let's see this. Died here. Here remarried. Remarried, everyone. What status is available in this case? First year, 2018, what status is available? MFJ with old spouse? With new spouse, right? W1, very good. With new spouse in that case. QW, conditions are satisfied, everyone. Can we claim QW? Nope. When the person is not widow or widower, how the status is going to be available as QW? Perfect. Any confusion here in this? Perfect. Let's move. Let's try to do the last one. Died here, same condition. That means what is going to be the first condition, first scenario, guys? Died here. And on the date of which they are married. First year, what status? Married filing jointly. Correct? No change. It is going to be married filing jointly. Surviving is not satisfying the condition. Surviving is not satisfying the condition. Can we claim QW? No. Can we claim married filing jointly? No. Option is available only in the first year. That means in the year of death, the option is available. Otherwise, the option is not available. I hope all the multiple scenarios are okay with us. Yeah. All right. So we stop here for a break. Let's catch up for 8:50 and then we'll move. Thank you. Okay, everyone. What should be the answer? What should be the answer, everyone? What is the QBI deduction in this case? As an itemized deductions, no. As an alternative to standard deduction, no. What is the alternative to standard deduction, everyone? What is the alternative to standard deduction? Itemized deductions, right? That's why not the answer, not the answer. It is not the adjustment, right? D is the answer. Correct. How about here? Molly meet the New Year's Eve in this case. They bonded, fell in love, married on 11/38. Correct. It should be MFG. Lisa was married with two dependent children in 2020. Her husband died in April and did not remarry um, before the end of 2020. Which status is available? Married filing jointly. Correct. You're saying A for this question, Rishika? No? Okay. Sure. What should be the answer here? Forget about this. For determining the deduction, leave this, does not matter. A, B, C, D, can just give me in the A, B, C, D format. D, D, A. Sure. Which of the following status is correct? Um, which of the following status is when you did not live with the spouse at any time during the year and you file the separate return, but you are separated. When the person is separated, everyone, that means the person is married. Is the person married? No. When the person is not married, there is no question about MFS or MFJ, either of that. That is why A is not the answer. D is the answer. Is that okay, everyone? Okay. Sure, you have a question? If only legally separated, yes, correct. So your question, Ami, is that if they are not legally separated and they are staying apart, is that what your question is? Yeah, in that case, they can file any MFJ also, MFS also. Legally separated is the key point in this question. Okay, anytime. Okay, 1, 2, A, B, C, D, guys. D, A. Satvik, see carefully the question. You know this, you're getting confused. Joe is 37. His wife died during the tax year. He has not remarried. His wife has no income. He has two minor kids living him. All the paid all the cost for this. He has paid all the support for the wife and the children. The filing status for this year is going to be married filing jointly. Correct. What is the status of a taxpayer if the spouse died during the year? Correct. Married filing jointly. Absolutely. Mary's spouse John died in an auto accident in 2019. She has not remarried. She supported the 5-year son all the year. What is the filing status for 2020? Correct. Qualifying widower. Good. 2019, what status is available? Correct. 2019, married filing jointly. Correct. In the year 4, after the Mindy's 3 children have grown and moved out of the house, Mindy, unmarried, moved her mother into a living assisting facility for which Mindy pays 75% of the cost. Mindy has not previously lived with Mary, and Mary paid for the living expenses when she lived in her own house. What filing status is going to be available in this case? Correct. Single. I have not discussed head of the household, so we'll see tomorrow maybe that what are the conditions that will satisfy that. Answer for this is also A, you are saying? Okay. Maybe you will not be able to answer this, but whatever is basing your understanding, you can tell me that now. 4 years ago, Cox's spouse died. You are taking full support, guys. Why you're not saying why the person is not getting the QW? Why it is not getting QW? More than 4 years. Brilliant. This is the key. See the trap they have given in the first year. Yes, only 2 years are allowed. Yes. For the time being, I'm taking single as the answer. Tomorrow, when I'm going to discuss head of the household, I'll revisit this question. Okay, then I'll ask you a question again. Right now, it is single, correct. How many questions we have done? These are 2 questions. No problem. Confusion is B and D, right? HW, childless couple with no other dependent, lived apart all the current years. On December 31st, on the current year, they were legally separated under the degree of separate maintenance. Based on this, which of the following filing choices is going to be available? Why there is a confusion? They are legally separated. When they are legally separated, that means no MFJ, no MFS. That should be single. Clear? Sure. Same thing. Legally separated under a degree of the separate maintenance. Same point. Last question. This is a good question. I suggest you guys in this question, try the rule of elimination. That means whatever is looking wrong to you, start cutting that. Okay, I'll do with you. For the federal income tax purpose, an individual is considered married for the whole year in the following situation, except, that means what are you looking? Are you looking married or are you looking unmarried? Everyone, please answer my point. Are we looking married or unmarried? Unmarried, divorce, same point. Everyone, are we looking married or unmarried? Ami says unmarried. Unmarried, I hope the question is clear because it says married except. That means we are looking under the condition when you are unmarried. Okay, let's see it one by one, everyone. If on the last day of the tax year, the individuals has not remarried after being widowed, what status do you give, guys, in this case? In the year of death, what status do you give? MFJ. Yeah, MFJ. Since it is MFJ, this is not we are looking for, not the answer. Okay, now D, individuals are married with no dependents, lived apart during the who are not legally separated. That means married, unmarried. D, married, not the answer. We are looking unmarried. Very nice. Let's see B. This is the maximum people are saying. If on the last day of the tax year, individual is separated under the interlocutory divorce, is this married, unmarried? It is married. It is married. When it is married, how can it be our answer? Not the answer. Lived with another individual over half the year as husband and wife in a state that does not recognize that marriage. That means married, unmarried, unmarried. That's why C is the answer. Are we good? Is that okay? Whenever you stuck, guys, in such a question, always try the rule of elimination. Start eliminating one by one and automatically you'll reach to the correct answer. Okay. Perfect. Let's read it from the book also. We have done qualifying widow, widower. I am on page number 11. If a taxpayer's spouse died during the year, the surviving spouse is considered married for the whole year for the filing status purpose. We discussed, that's why we file married filing jointly. If the surviving spouse did not remarry before the end of the tax year in which the spouse died, he can file the joint return in this case. We have done this. For the next 2 years, what status is available for the next 2 years, everyone? Qualifying widower. But do you have to satisfy the few conditions? Are you supposed to satisfy the conditions? Yes, you're supposed to satisfy the conditions in that case. Taxpayer may be entitled to a qualifying widower with a dependent child if the surviving spouse remarried before the end of the. If surviving spouse remarried, guys, in that case, what status is available? Married filing jointly with the new spouse. He or can file the joint return with the new spouse. Deceased spouse filing status will be married filing separately for that year. What does that mean, everyone? Correct. The new return for you is going to be married filing jointly. This is the year. Here, let's say husband died. And here, wife remarry with H1. So what status W is going to get? W will get the status of MFJ with H1. Now the question is, this return also be filed. H has died, but whatever is the income of the H, that needs to be reported. That will be reported. Who will file it? Obviously, the legal executor of the person is going to file. Legal representative of the is going to file. Legal heir is going to file in that case, and that status is going to be married filing separately. Very weird point here, but that's how the law is. Law is saying if you are remaining in that case, the status which is available, married filing separately. Is that point clear? Okay. What are the three conditions, guys? Do you remember three conditions? We discussed three conditions. Three conditions. Number one, it has to be a kid. What kind of a kid? Biological, step, adopted, not a foster kid, not a foster kid. Second, you are maintaining the house. You are maintaining the house for the full year. Let's call it whole year. Whole year. What is the fourth condition? That third condition, you are maintaining more than 50% of the cost of upkeep. These are the three conditions. Why I was saying the whole year? For whom we are looking this condition, guys? For whom we are looking these conditions? Qualifying widower, absolutely correct. Correct. Qualifying widower of a kid of a qualifying widower, right? So easy for us to remember. This is also W. This is also W. That means whenever we are talking about the qualifying widower, we are looking that the house is for the whole year. For the kid, the house is the principal resident for the kid in this case. Is that point clear, everyone? Okay. One last point, everyone. If we are saying that house has to be, okay, I'll see this tomorrow. Let's see it. Whole tax year. Correct, Rishika. It has to be whole tax year. Any questions, guys, up till here before I stop today? No? Okay. Can we quickly revise it all together, guys? Whatever we have done, can we quickly revise this? Okay. It's not my revision, it's your revision. So I want everyone to be engaged in that case. Sit back and keep throwing the answers. Okay. Keep throwing the answers. Okay. The format we have done, guys, gross income minus the adjustments. Then from this, we are going to arrive at adjusted gross income, AGI in that case. From that, we are going to reduce a standard deduction or itemized deduction. Standard deduction or itemized deduction, whichever is higher or lower. Standard deduction or itemized deduction, whichever is higher or lower, higher, whichever is going to be higher in that case, right? Then we are going to reduce from that the 199A deduction, which is also known as the QBI deduction in that case. That will give us the taxable income in that case. What is the other name? What is the other name of the adjustments, guys? What is the other name of the adjustments? What is the other name of the adjustments? Above the line deductions, right? It is known as above the line deductions, and we call the below deduction, that means the QBI deduction or standard deduction or itemized deduction, below the line deductions also in that case. Then we talk about the taxes also. On the taxable income, you're going to charge the federal income tax. From that, we are going to reduce the tax credit, other taxes we are going to add, and then we are going to reduce the withholding tax or whatever the taxes you have paid, and that becomes your taxable income. Okay. All of it we are going to discuss it. So don't worry, every item. In fact, if you see 80% of our course, 80% of our course is going to be based on this format only. So don't worry. Almost 20-25 classes I'm going to spend on these format only. So don't worry if it looks bigger also. Don't worry. We are having two slabs, guys. We are having ordinary slabs. We are having the LTCG or the preferential slab also in this case. Then we talk about exemption has been suspended by the TCJ. So it is not valid anymore in this case. Then we talk about the filing status. How many filing status we have, guys? How many filing status we have, guys? 5 filing status we are having. Number one, quickly, what are the 5 filing status we are having? One, quickly, short, you can write in the short. Married file single, married filing jointly, married filing separately. Fourth is qualifying widower, widow, surviving spouse. Fifth is head of the household. Brilliant. 5 we have done it. Single or married, when we look, beginning, middle of the year, end of the year, when do we look the person is married or separate? End of the tax year. Brilliant. We are looking end of the tax year. There is only one exception we have done. There is only one exception we have done for this, that we are not looking for the end of the year. When we are looking at the time of a death, in case of a qualifying widower, we are looking the date of the death. Brilliant. Responsibility, guys, the responsibility of the married filing jointly. It's jointly and severally liable. It is going to be jointly and severally liable. That means they're equally, they are going to be liable for the full amount in that case. Very nice. Then we discuss he and he. That means same gender can file the married filing jointly, everyone? Yes. Can boyfriend, girlfriend file the married filing jointly? No, they can't file it. They can't file it in that case. Does it matter? Does it matter the one spouse is working, another spouse is not working? Still they're liable? Yes, they're still liable. They're still liable in that case. If you're filing married filing, if you're filing married filing jointly, guys, your tax year can be different. Can your tax year be different? No, tax year has to be same. Can your accounting method be different? Yes, accounting method can be different. Accounting method can be different. In that case, we talked about this. Then we talk about this. If it is the temporary, interlocutory, interim, that means the person is still married. We have done this question also here. In that case, we are looking for the final divorce in that case. So we discussed qualifying widow. First year, everyone, very important point. You have seen many questions in that case, how they're trying to confuse you. First year has to be married filing jointly. Last 2 years, next 2 years is going to be qualifying widower, provided you are satisfying the conditions in that. What are the conditions we are satisfying? Number one, first condition you have to satisfy, it has to be a kid. Kid could be the biological kid. It could be the biological kid, could be the adopted kid, it could be the step kid. Which kind of kid we are not looking? Which kind of a kid is not looking? Foster kid. Remember this, foster kid. Again, this is the area they'll try to confuse you. Foster kid. Second, you're taking care of the house for the kid in this case. Third condition is going to be you're providing more than 50% of the cost of upkeep in this case. Yeah, that's pretty much it, guys. I'll stop it here only. Please revise this. That's going to be sufficient. Tomorrow, I will start with the head of the household. And after that, I'll move to the dependency rule. Again, a very, very important topic in that case. Okay. Any question, let me know. I'll be more than happy to answer. And I'll cover that tomorrow itself. All right. Thank you so much. And I'll see you tomorrow. Bye-bye. Good night.